Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled you're here. We've got a very interesting gentleman on the show today. His name is Brad Cartier, and Brad is a real estate developer, writer. He's a proptech investor, just really impressed with just the brief introduction I've had to him already this morning. Brad, welcome to the show, my friend.
Yeah, thanks for having me on, Rod.
You bet. So why don't you give us a little background on who you are and what you do in the real estate space, and let's just take it whatever direction we take it from there.
Yeah, so I'm a bit all over the place, but it all comes back to one basic premise, and that's real estate. I've been a real estate investor now for 15 years, starting in pre-development condos and now specializing in missing middle multifamily development. So my current development company, we buy, build, and hold missing middle multifamily and secondary and tertiary markets up here in Canada, just outside.
So let me just interrupt for 1 second. Forgive me. So guys, just what he means by missing multifamily or middle multifamily is, there's a great business model where you just go in and find in an infill area in an urban environment, you find, beat up old property and you tear it down and you build new multifamily. So that's what he means by that. Please continue. Forgive me.
Yeah, and there's a longer history to that, and I'm happy to get into why missing middle multifamily is actually referred to as missing, and why I feel like over the next decade it's going to be a booming subsector of the multifamily industry for a number of reasons, but we can get into that later.
No, I'd actually love to talk about that. But please continue with your background. Forgive me for interrupting.
Yeah. No, so main focus on the development company, but also have a lot of experience in marketing and writing and angel investing in property technology companies. So I have a number of contracts there. I do a number of angel investments. I'm a mentor for MetaProp, which is a VC out of the US. I just really enjoy writing, reading about real estate and educating folks about it.
Yeah. And I was impressed with you, Brad. As I said, when we first came on, is, one of the questions I ask is what's somebody's outcome for being on the show? And typically there's a financial outcome. They want to raise money, or they want to, bring attention to a course or a program or this and that. And so, I always try to find the motivation. The motivation is for Brad is just to add value. So, Brad has a newsletter called Briefcase, and it's briefcase.email, and it's just an educational platform for, real estate investors and developers. So, I was really impressed with his response there. But so let's talk about your development, because I actually think it's a great business model as well. I know I've had people on the show that do it in Boston, in some of these really high dollar urban markets like Boston and San Francisco and things like that. So could you speak to that the way you described it, missing middle, what'd you call it? Missing middle
multifamily.
Yeah. Missing middle multifamily. Okay.
Yeah, exactly. So thanks for the opportunity, Rod. The way the housing in North America post World War II, as with the invention of, the mass production of automobiles and urban sprawl, we've had quite a huge exodus out into these suburbs, really to the neglect of these small, what we call now missing middle multifamily units, which are anywhere from a duplex all the way up to, there's different definitions, but
20 units, 10 units, whatever. Yeah.
Yeah. Sort of that low to mid-rise, gentle densification, that type of living arrangement that's been prominent in Europe for centuries, that we've sort of neglected here in North America. And if you look at, National Association of Home Builder data on missing middle specifically, it's been woefully neglected over the last several decades, to the point where it's almost non-existent right now, hence the term missing. But it's also a big part of the solution to our housing affordability and supply woes, because, you don't have to, clear cut these huge areas for urban suburban development. It's easier on the environment because typically you're retrofitting. It's for investors, there's a lot of positive headwinds with missing middle multifamily, particularly on the regulatory and zoning changes that are happening across Canada and the U.S. with SB9 in California. Florida just issued a bunch of new upzoning regulations, and really what they're saying is that we want more housing supply, but we want to make it easier on the environment. We want to make it easier on our neighborhoods. So we're going to enable this duplex, triplex, fourplex, sixplex model to allow people to more easily build them, and they don't have to spend 2 years going through all these permitting and rezoning and
so they're speeding it up. They're making it easier for the developer. So let me ask you a question. You said retrofit, and I was thinking these were scratch off and rebuilds. So sometimes you're taking an existing building and maximizing it. Is that accurate, or is it both? Is it both?
It's both, but okay. It's, as you know, the term highest and best use. If you can retrofit a bigger, older building into a fourplex, it's much easier on the pocketbook and the environment than tearing it down and building new.
Yeah, for sure. Okay, so let me ask you this. Are you doing any conversions where you'll find a small office building, for example? Have you done any of that? Or has it been typically residential to residential? Just out of curiosity for me, this is satisfying.
Well, from my experience specifically, it's just been ground up development infill. But certainly there's conversions, there's retrofits, and there's the sort of traditional infill development that can fit into that missing middle niche.
Yeah, and I would guess that in some of these markets, there's probably grant money or low interest loan money out there as well for anything affordable housing is the buzz right now. People can't afford it. So are you aware of any of that, at least domestically here in the United States?
Yeah, I mean, it really depends on the county and the state. Right. There is, as you know, opportunity zone legislation, and there's a lot of grants available for, market rate rents that hit a certain threshold of median income in that region. So I would encourage investors to look at those local grants. And they're just making it cheaper now. Governments are wising up to the fact that, we need more housing. We need to enable the private sector as opposed to stand in their way, remove the regulations. There was a good study done by the Multifamily Council in the US that, 40% of development costs go to some form of regulatory compliance, whether it's fees or permits or studies. Wow. And as a developer, I understand the need for some regulations, but I mean, when you consider our current housing issues and sky high rents and sky high housing prices, why do you think they're that way? It's exactly because of the red tape that we put in front of developers and the zoning restrictions that we have across North America, which are 80% single family zoning. Yeah. Now, has your experience to date been mostly in the Canadian environment, or have you done some stuff down here in the States as well? From a development perspective, it's only been Canada, but like I said before, I'm steeped in the U.S. industry from an informational standpoint, so happy to chat about that as well. Yeah, no, I'd like to chat about that. So because I certainly have a lot of Canadian listeners, but without question, the big bulk of my listener base and viewer base is domestic here in the States. So, if someone were to want to pursue this endeavor, I assume they'd either have to be a general contractor or hire a general contractor on their team. They'd need an architect. It probably starts with the architect, but gives a high level kind of an overview of the process. Yeah, absolutely. So all of our deals that we found, and we have about 6 projects under works right now, and a number of ones under management. The key is, as you make your money when you buy. So most of our deals we find through off-market relationships. So having those initial relationships, those local relationships, are extremely important. Before, I'm sorry to interrupt. Before you even do that, you've got to geographically decide where you're going to do this. Are there some tips as to what to look for in a particular, urban environment, before you go hog wild? Any comments there? Yeah, I mean, generally from an investing standpoint, we want to be, following the path of progress, or looking for that gentrification line and sort of building on that line or near that line so that we have that long-term appreciation potential. I really like, and this was even prior to the pandemic, I love small towns, both in the US and in Canada, anywhere from 10 to 50,000. Wow. assuming the labor market and it's not just one anchor employer.
Right.
There's very few purpose-built rentals in these communities, so vacancy rates are almost zero. Acquisition costs are much lower. I have a lot of friends who play in the big urban markets, and before we were recording, you were talking about Boston and others.
Right.
That's totally you can do missing middle in those communities as well, and a lot of people are, and it's a game changer for those communities. But I like the smaller markets just from an affordability.
No, makes complete sense. Makes complete sense. Now I will say this, guys. What he just said is super important. You don't want a one-horse town from an employment standpoint. Like a one big employer, a plant or a military base even, or any of that. Because if the horse gets sick or dies or leaves town, you're in big trouble. But what you just said makes complete sense, because there's probably tons of these beat up old urban town centers in these smaller towns. And as long as you've got some diverse employment, because jobs is the most important thing with multifamily, as long as you've got some diverse employment, I could totally see the numbers working in an environment like that. Now, of course, the rents are going to be less, but I would guess that it's probably easier from a regulatory standpoint as well, because you can build, halfway decent relationships with some of the people. I mean, in the county or city or whatever you're dealing with. Is that an accurate statement as well?
Yeah, absolutely, Rod. And, I can pick up the phone in any of these small markets that we're operating in and call the town planner directly.
Right.
You can have lunches with the mayor versus, a place like Boston or New York.
Right.
That's, a lot of these places are just black holes when it comes to permitting and all that kind of stuff. So,
Okay.
yeah, but yes, the rents are lower in the smaller markets for sure, but because you're building newer, sort of B+, A- is what we're focusing on. Our rents actually tend to be a lot more comparable to the urban center close to us, which is Ottawa. And then when you factor in our acquisition costs that are about half the price of what they would be in an urban center, it tends to pencil out a lot better.
No, that makes complete sense. So you identify one of these markets, then a little more logistics, high level, of course, but if you could just give us a little more of an idea of somebody that's considering this, what they need to think about.
Yeah, I mean, the crux of all this, and you already mentioned it, Rod, is your general contractor, whether that's you or your builder. So we actually have builder partners that are equity shareholders in the projects that they operate on. So we're able to do a lot of these construction projects almost at cost. So our cost per square foot is quite low. But yeah, the key to all this is, yes, you have to acquire right. But if you have the wrong GC or someone who's inexperienced, once you kick in that construction financing, as you know, that's expensive money. So if you have delays, if you have arguments, if you have any kind of hiccups, you're going to be stuck holding the bag. So that's the key is really finding that partner, or whether it's yourself, to actually build the thing or retrofit.
How did you go about that selection process? Was it through referrals, I'm assuming? But I don't want to assume. I'm just curious.
Yeah. Mostly referrals and our network. Like I said before, all of our deals are off market. So the old adage, you're only as strong as your network around you. I think it rings true. So spending a lot of time building that up in a particular market, I think, provides a lot of value long term. It's a bit like compound interest. So you especially in small towns, reputations travel fast. So you can get a good sense of someone's track record pretty quickly in a small community.
If you're connected and you've got a lot of connections there. I tell my students, my warriors, they're called, got almost actually over 1,000 around the country. And my most successful ones by far, something I'm really proud of, I'll brag for a second, is they own somewhere in the 80 to 90,000 unit range now. And I've only been teaching for 5 years, just super proud of that. But almost all of those 80 to 90 that we know of, 1,000 doors were done between warriors. It's the connections that make these things happen. So guys, here's just another example of the power of that, getting around. So even if you're not in my warrior group, get out there and make relationships, get to, meet as many people as you can, build deep relationships, because that your net worth is your network. And that's just, I know that's cliche, but it's the truth. So, another thing you said, I just want to hammer home, what an awesome strategy, guys. If you bring in a general contractor that's used to just making money, that doesn't have any equity in anything, and you offer them equity in one of these builds and ultimately cash flow, that's very desirable for a contractor. So if you find a reputable contractor that has good references, my God, that's a home run to bring them on the team, let them do it for cost. And basically their contribution is that sweat equity piece. Am I describing that correctly, Brad?
Yeah, absolutely, Rod. And that's the pit. That's exactly that. You nailed it on the head. It's,
Okay.
You do the work up front for the 12 months and we will pay. Like, it's not like you're doing this for free.
Right. The subs get paid, but you just minimize or eliminate what, you're maybe a little bit for you, but so you can survive, but yeah. Right.
Yeah. They're not taking the standard builder lift on materials and supplies and all that kind of stuff. And given that they have skin in the game, they're a little bit more diligent when it comes to the construction. And then the pitch is, we come in on the back end and property manage it, and we'll send you dividend checks, quarterly in perpetuity until we sell. Beautiful thing.
And then how do you find, and I know you need a good architect, especially for new build and I suppose for a retrofit. Any same thing, referrals? I mean, would that be the other key person in the project, or am I missing anybody?
No, I think the key person is probably the property manager as well as the builder. But we do have a big team of contractors who do things like, geotechnical and architectural and surveys and excavation and all that kind of stuff. But those are more peripheral team members. The core of what I like to call a vertically integrated development company, where you acquire, build, and hold and manage yourself. The real key is the property management side, because as you know, that's where you.
Well, sure, that's the long term. And when we carve up a regular acquisition that we purchase, not a build, the asset management piece of the GP split is always the largest, because that goes on for years. And so. That makes sense. Yeah, I so you have GCs that wear the architect hat. Got it. Okay. Interesting. So, well, that's this is really interesting. Let's shift gears for a minute, because you're kind of unique in the fact that you do a lot of work and advise, and you consult with real estate technology companies. Can you maybe how did that happen? Number one, and then number two, what are you seeing that's exciting and cool? Maybe you can plug a couple. It's fine. We can do that.
Yeah. I mean, how I got started was just love real estate. And as I started investing in it, started doing contract work with a couple startups in Silicon Valley, and it just sort of ballooned from there. And I think there's something like 9,000 proptech companies globally right now. So there's quite a lot of selection out there, and it ranges from anything from tenant experience to access control to HVAC, to your back end property management systems, to tenant relations, screening, all that kind of stuff. So there's so many solutions out there for owners and investors to tap into, and there's a number of directories out there that you can sort of parse through the different products that are available. The big one in the US is CRE Tech. There's another big one as well, both in the European market and the US, called Unisu. I tend to defer to those if I'm looking for solutions. And they both have really interesting procurement tools, and I have no affiliation with either company. But they have interesting procurement tools that, you can input what your needs are, like, access or security or package theft or whatever it is. And then they have teams that can suggest solutions for you. But I mean,
so they'll be suggesting tech companies that are a solution for what your need is that what I'm hearing? Okay. So you said CRE Tech. What was the international one? Could you spell that for me?
Yeah, it's Unisu, UNISSU. I believe it's just unisu.com.
Unisu. Okay. Love it. Okay. That's really helpful. So, okay.
And I mean, what was just to go back to your second part of the question there, Rod, sorry to interrupt. What's been the most exciting? I think, since the pandemic, we were always on an upward trajectory with digital technology in the real estate industry. It's just, as you know, with legacy industries, whether it's banking or insurance or real estate, it's almost dragging, kicking and screaming. There's a lot of legacy software out there that the bigger players are sort of holding on to, and the fear of change and all that kind of stuff. But, we were getting there slowly. When the pandemic hit, everything just got accelerated out of necessity. There was no choice but to offer more hands-free digital solutions to your tenants, to your employees, and all that. So you're sort of seeing the explosion of prop tech over the last couple of years. And even with venture capital, drying up, the printing presses are for the most part off in the US, which I think is a good thing. But that means the era of free money is over. So, VC money is drying up quite a bit, but you're actually still seeing, hundreds of millions of dollars a week pour into prop tech just because it is such an appealing industry for investors and startup investors.
Interesting. So I know you angel invest in some of these as well. I mean, you get to cherry pick since you're right there in the thick of it, seeing what's exciting. Love it. Well, this is very interesting. And so you want to talk about your newsletter real quick? Because like I said, typically we don't allow promotion to speak of on the show, but the fact that you don't monetize what you do, you're just adding value is really admirable, number one. And that's why I have no problem drilling down on it a little bit. So what is Briefcase?
Yeah, so Briefcase is an educational newsletter focused entirely on real estate. We publish weekly on Friday mornings. I write all the pieces myself, and I have a co-founder as well who helps me promote and all the back end stuff. But we have about 10,000 subscribers now. We have a 60% open rate, so a very engaged audience, and we really try and focus. We take a deep dive on one topic every week, whether it's zoning, regulatory changes. Last week we spoke about the influx of real estate agents over the last couple of years and what that means for investors. We talk a lot about NIMBYs. That's a topic that's very near and dear to my heart, and the whole rezoning and upzoning and enabling more densification. So we pick a topic every week and write about it. And next week we have a piece coming out about Pella, Ohio, and what the Pella Corp is doing there in terms of improving the
window
housing
company.
Yeah, exactly.
Okay.
They're doing some really cool stuff in Pella to try and encourage people to move there because housing is so scarce. So it's a really good example of the private sector stepping in and enabling housing affordability. So it was a really great story. So we're writing about that next week. So we pick a topic that we find very interesting. We take a deep dive on it, and we try to make it very accessible. We don't like sort of the academic type content that we're seeing out there for real estate entrepreneurs. And we kind of took a playbook from, I don't know if anyone's read Morning Brew or The Hustle, but just sort of those very not cheeky, but conversational type newsletters, make it a little bit more
instead of dry and boring. Got it.
Yeah, a bit more conversational. We've got a lot of emojis and giffies and things like that. We try to have a little fun with it.
Nice. So it's briefcase.email, guys. Well, listen, Brad, it's been a real treat to have you on. I really appreciate you coming on and sharing some wisdom. And, it's a pleasure to have met you.
Yeah. Thanks, Rod. I appreciate it.
All right. Take care.
You too.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our Warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our Warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our our incredible network and take advantage of the incredible opportunities that are coming very soon. Apply to work with us at mentorwithrod.com or text CRUSH to 72345 and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text CRUSH to 72345.